The S&P 500 just closed just below 681, but the smart money is looking elsewhere. We're not looking at the headlines. We are currently trapped under a massive high volume node. Save this video now so that you don't miss the actual entry points, or if you don't have time to watch the entire video, ensure you save it for future reference. We had a massive rally in April and was sitting above the volume weighted average price, the 20-day and the 50-day SMAs. Retail's seeing a breakout, however we see something completely different. We see a point of control ceiling at this present time between 679 and 683. There is too much supply here for a straight shot higher. The secret sauce? Our data suggests a technical retracement is imminent. We're looking for a price to be pulled back to the developing point of control. That's a 664 to 660 range, and this isn't a crash, it's a healthy reset to gather liquidity before the next leg up and retest that point of control between 679 and 683. Once we test that level and hold, then we have the fuel to blast through the 683 resistance. If you're chasing at this present time 680s right now, you're potentially playing right into the hands of elite institutional levels. If you're a buyer at this retest, then let us know. Or do you think that the actual 683 ceiling holds? Comment point of control, or comment developing point of control below if you feel also that the chart will retest the lower level before continuation. Follow for more real data and insights from an institution, and this is not financial advice. Let's just elaborate a bit more on what we've said so far. We can see at the moment that we've pretty much rallied over the past 2 weeks, and we're currently at the current point of control. We broke through the level 1 ceiling quite aggressively, and that is because, as you can see, when this was the current point of control, there was very little liquidity, which then it met the current ceiling level, institutional ceiling level. So now this becomes our new point of control zone, even though we've closed above 20-day volume weighted average price, the 50-day. This is still an area of interest, the current now point of control, and this now will become the developing point of control. So we're going to mark this off. This now becomes the level 1. We're going to lock that in, and this is the key area, next level of price that we need price to close above to see any sort of continuation up to 700. Currently on a weekly, so what we're going to do is we're just going to grab the data from last week, and we're going to go back to the beginning of the year just to see if there's any other quite obvious developing point of controls in and around 647 to 662. Okay, so as you can clearly see, not really a lot of adjustments to the previous candle, to the previous profile. So we're going to get rid of this, and we're just going to utilize the data that we've already got. This goes all the way back to September 2025. However, this is more relevant at this moment in time. Okay, so we're actually going to change our levels. This is still a level 2. This is still a level 1. But because we expect it to retrace back down to the 662, we're going to use this now as a developing point of control. We're going to slightly lower it. We're going to use the more up-to-date information. So what we're hoping for is a retracement from the next week or two back down into this consolidation zone, okay, 664 to 657, directly in the line of this developing point of control, which is currently at 657. Should get a little wick potentially into this zone, close above, continuation, and retest this area once again. Don't forget to follow, share, save and repost this. The more that people know, the easier it is for you to make your investing decisions. Thanks for watching.